Greetings and thank you for tuning on into the Melanomics Podcast. My name is JD Garnier. I am the host of the Walking in Wealth radio show and the creator of Melanomics. And my hope is that you walk in wealth, mentally, physically, spiritually, and financially, to take the things that God has already given you and use them to create a life of purpose, so that wealth means much more than just what you acquire. Wealth is what you become. You are the wealth. Before you have an investment portfolio, before you start a business, before you own real estate, you have a specific and unique set of talents and abilities and gifts that form the basis of execution of anything that you do in life. That's the wealth. Those are the things that you need to hone in on and make sure that you expand and create so that you can live the life that you want to live. I'm excited about this show today. We got a very, very special guest, somebody who's going to drop some jewels on us. He's going to give us some information, inspiration, education, and motivation. Before we get into that, make sure you guys follow me on all of my social media platforms, Instagram at GarnierJD, Facebook at JD Garnier, and subscribe to the Walking in Wealth Melanomics YouTube channel. Now, who we talking to today? We're talking to business owners. You know, a few months ago, I did a show talking about the HBCUs of business, and you'll hear me use this phrase all the time. A hustle is an informal, unorganized business, but a business is nothing but a formalized, organized hustle. And so if you found something that you're good at, you found something that you like doing, you found something that you know how to make money at, but it's unorganized, it's informal, it's all over the place, in that case, you only have a hustle. And so the goal at that point is to take that and organize it, formalize it, and create a structure around it so that you can have a legitimate and formalized business. That's the first path to wealth. Now, the HBCUs of business are from hustle to business to company to unlimited value. Once you've created the business, the next step is to take that business and turn it into a company. Turn it into something that has a repeatable process that can generate profits and revenue outside of yourself. Something that can stand alone and has value without your work or your effort. Once you've created the company, then the next step is to create unlimited value. Figure out how to scale, how to grow, how to get as much value out of what you've created as possible so that you can truly create generational wealth. Now, we're going to talk a lot about that today. And my next guest, this guy is doing a lot in the business community. He does so much with business owners, and he has a tremendous amount of value to add and share. I'm so happy to welcome to the show a good friend of mine, Lenny Saizan. How you doing, man?
Man, I'm doing good. Good. It's great to be here. Thanks for having me.
Man, so listen, you work with a lot of business owners, and so tell me about the current business landscape, especially in the Black community. What are some statistics that stick out to you that are going on right now?
Okay, yeah, sure. So, man, you know, there's so many statistics out there, and I'm not going to try to regurgitate all of them, but there's some that really resonate with me and stand out. You know, one huge statistic is that there's approximately 2 million Black-owned businesses in the country, and only about 5 to 7% of those businesses are employer-based businesses, meaning they have at least one employee. So, and that could include the owner themselves. So a lot of the Black businesses are really operating as sole proprietors, right? Meaning they're not even employing themselves in terms of like a W-2 employee. So when you look at the Census Bureau data, it only counts employer-based businesses. So those 2 million businesses out there, only 120-something thousand of them are reported in the Census Bureau from the standpoint of having employees. So, you know, I think that kind of links to what you just talked about in your intro is, you know, a business is a formal hustle. A hustle without a formal business is just a hustle, right? So a lot of these business owners may have a business, but without employees, not even employing themselves, maybe that's just a hustle.
You know, it's funny, and I've talked about that stat before, And the way that I look at it is, right, if we have over 2 million businesses and only 5% of them have employees, there's enough value in helping a larger percentage of those 2 million businesses get employees. That's enough to create enough value in our community. Because if we could bring that 5% number to 20%, now that's 20%, that's 400,000 businesses in our community that have employees.
Exactly.
Then we become job creators
Right.
in our own community.
Right.
So tell me about maybe some thoughts or ideas that you think that could help business owners improve or increase their business, scale, maybe get to a point where they can have employees. What
Yeah.
are some things you think about?
So a lot of it is around just building a supportive ecosystem for black businesses. So one of the other things I think I should mention is that 5% that has employees. So if you look at small businesses in the United States, the average American has about 15% of their wealth in business equity. When you look at black-owned businesses, that is only about 5%. So, and within that 5%, the equity, the value of the equity is about a third of what it is compared to white Americans, or in about 50% compared to any small business owner. So you really need to support the ecosystem for black-owned businesses, and part of the ecosystem should be focused on breaking down the barriers from economic barriers, marketing, market barriers, cultural barriers, and institutional barriers, right? So all of those things are kind of linked to the history that we have in this country with racism and discrimination, but it's going to take the public, private, and institutional sectors to help create a more supportive ecosystem for black-owned businesses.
Okay. So, and you said a few interesting things there, and you talked about the equity in it. And I think you know this as well as I do. For the average business owner, if that's what they do, most times a large part of their worth is tied up into the business, right? They're the value that's creating the business, but a large part of what they're worth is tied up into that business. And so you do a lot of things with business owners in that regard. What are some things that business owners can do at some point down the line in the future to get that value out of the business so that it's enough to take care of them and their family in retirement or whatever else it is they're trying to do? I mean, do they sell a business? Is it a succession? What are some things they do for that?
Yeah. So one of the most important things you need to do is kind of separate yourself from the business. Like if you're familiar with the hub and spoke model, you don't want to be the hub for everything that happens in your business. So it's easier, for instance, to train your employees how to prevent a problem than to teach them how to fix a problem. So if all of your business is running through you, the customers have to speak to you personally or prefer to deal with you personally, that is creating less value within your business. So when you think about an exit strategy and a buyer interested in buying your business, if 50% of the business is going through you, then there's a huge risk to that buyer that once he acquires the business, they're going to lose that 50%. Another thing business owners can do, there's something called the Switzerland structure. So, and that's a principle where it ties back to the country of Switzerland being neutral within the other nations in the world. So right. They don't get involved in third-party conflicts, right? So you want to create a sense of neutrality or a structure of neutrality within your business so that you're not dependent on one supplier, you're not dependent on any one employee or any one customer. If you have a customer that creates or generates 10% or more of your revenue, you are at risk. If you lose that customer, you're going to lose a significant portion of your revenue. So a buyer coming in is going to look at those kind of things. So if I lose this employee, if I lose this vendor or this customer, then what are the risks of me purchasing this business? And they're going to factor that into the value of your business.
Absolutely. We call that customer concentration.
That's exactly.
And that's a big
one of the
thing,
factors.
actually, that people look at in determining the value of your business. Because even if you're generating $5 or $10 million a year with your business, if it's dependent on 2 or 3 customers,
right,
that's a risky business. And it's funny, what you just said about separating yourself from the business, that's right in line with my definition of wealth. Because I define wealth as the separation of time and money. As long as you have to work and use your labor and your effort to make money, as long as you got to work in your business, you can't create wealth.
Right.
You can make a lot of money, but you can't create wealth because it is dependent on your time and your labor.
Yep.
But once you create a business independent of your time and labor, now you don't have to be there.
Exactly.
Right? And it's still generating money.
Yeah, if you have to be there on it all the time, you own a job, not a business.
Basically. And a lot of people actually, some people buy businesses, which are really, they're buying a job, right? Because they have to be there all the time.
Yep.
So that's interesting. So when a business owner is thinking, whether they just starting out or they've been doing, running their business for 5 or 10 years, or they're thinking about the future and they've built a legacy, what are some things in terms of planning and actually transitioning that you see a lot of times they fail to think about?
One of the big things is, first of all, they don't start planning early enough, right? If you're thinking about exiting your business, you should start planning that 3 to 5 years in advance. But what I tell people is start planning an exit from the very beginning. So if you look at the life cycle of a business, from ideation to startup phase usually lasts about 3.5 years. Then you're into sustainability, and that's when you're trying to just get your processes established, maybe get some more customers, maybe you raise a little bit more money at that point, and then you go into scalability, when you start maybe branching off into more markets, introducing new business lines, et cetera. And then the last phase is exit. So you want to be thinking about the exit when you actually start building a business. And what I mean by that is putting processes in place so that it can create value and make it easier to exit. One of the things I talk about a lot is just putting processes in place so that the next person can come behind you and easily pick it up, and it's all documented. And now you also have really what that boils down to is having a documented management system. Right. And that goes from onboarding employees to offloading employees, your hiring practices, your sales cycles, all of those things. If you have that completely defined and documented, you're creating value for your business, and you're also making it easier for your exit strategy. One of the most important things within those processes is your accounting. So a lot of times what I see is, you might have a small business generating $5 million in revenue. But then you look at their financials, and it's just messy. It's hard to see where the money's going. It's just not in a clean format, right? To where someone can really look at it and easily understand it. And that's one of the biggest things with all businesses, not just minority businesses. You see that in a lot of businesses, actually, where their books and record is not really clean.
Right.
Yep.
And so I'm sure you see that a lot with business owners that you work with. What are some questions that you ask to kind of gauge where they are or where they need to be going? What are some things that you ask just to get them to think about what the next steps are for them in their business?
Yeah, so one of the most important things, one I want to learn the history of the business, how long you've owned the business, why are you thinking about selling now, and what's your plans after you sell it, right? So that tells me a lot about just where they are in terms of being serious about selling their business.
Right.
Because selling a business is emotional. A lot of people put a lot of their whole life into a business. So you get to a point where you think you want to sell it, but then you don't really know what the next steps are, right? So, if you're not really prepared for that, then maybe you're not quite ready to sell your business. The other thing is, how successful have you been? How profitable are you as well? That's important. Business investors or buyers, they're buying cash flow. They're buying future cash flow. So they're going to put a value on your business based on those future cash flows. So if they want to earn a 15% return on their money year over year, they might project it out 10 years, and then they're going to discount those cash flows to the present value, and that's how they're going to determine how much your business is worth. Another thing that business owners really, really don't think about, especially if they do have some good value within their business, they don't think about tax implications when you sell your business. Right. So, there's a lot of ways to structure a transaction to where you actually net a lot more when you sell your business rather than if you just took a lump sum cash payment at the point of sale. So, if you really want to use money for retirement, just net more out of your business, you really want to look at how to structure the transaction to limit your tax liability. One of the big things people miss, especially in a capital or asset-intensive business, is something we call depreciation recapture. So what that means is if you have assets that you've depreciated, say you have a 10, 15-year depreciation schedule, but you sell your business before or after you've depreciated everything, right? Say you depreciated your asset down to zero, but then when you sell your business, you get value out of that asset. Uncle Sam is going to say, wait a second, you depreciated it down all the way to zero, and you just, part of your sale was $50,000 for that asset. You're going to have to pay taxes on that $50,000 that you hadn't paid because you depreciated it. So,
right. So,
yeah.
And you know what? It's all kinds of things like that a lot of times business owners just don't have time to think about, right? Mm-hmm. You're just trying to run your business.
Right.
Like I said earlier, you found something that you're good at. You found something that you like doing. You found something you know how to make money at. And that's your focus.
Right.
Make as much money as possible. And so that's why I'm so big on building a team. And unfortunately, we live in this do-it-yourself society where everybody wants to do everything themselves, right? I want to do my own accounting. I want to do my own investing. I want to do my own legal work. But if you truly want to build value out of your business, you need to start building your team. You need professionals on your team. You need an attorney, an accountant, an advisor, a consultant, a business broker. You need people that can provide the expertise to get and extract as much value out of what you're building as possible. And a lot of times when I meet with business owners, this is the scenario, right? They've created this business and they have advisors. They have a CPA over here. They have a lawyer over here. They have an insurance person over here. They have an advisor over here. And all of these people are doing independent work, mm-hmm. but there's no cohesive plan or strategy around how you get value out of your business. Right. Tell me about the importance of a team when it comes to whether it's selling a company or transitioning or just extracting value out of a business.
I agree with you 100%. You definitely need a team. You need all of those folks, CPAs, attorneys, who else? Advisors, strategic exit planners, whoever it might be. You definitely need all of those. Now, one thing you did mention is a business broker. Another way to refer to a business broker, such as myself, is a business intermediary, right? So a business intermediary, what I do is I bring all of those people together, and I'm the central point of communication to understand what needs to be done to one, create value in the business, two, to actually get the transaction from marketing all the way to closing. And I bring all of those folks in. If you don't have one already, I can bring one in that I typically will work with. So it's really important that you have all of those things. Either they're with you along the way, the entire time you're building your business, or as you start thinking about exit planning, you want to definitely talk to CPAs, and mainly when you think about a CPA, you probably have someone that does your accounting and taxes, but you may need someone who specializes in taxes, right? So if you have a CPA who specializes in taxes, he can help you understand how to best structure your sale for an exit.
Right. And you know what? You might be listening to this and saying, you know what? I'm not there yet. I'm just starting out. I have a little small restaurant. I'm a general contractor. Whatever it is that you do, and you might be listening to what we're talking about and say, hey, I'm not there yet. But my advice is, if you have a vision for where you're trying to go with your business, this stuff is relevant. This stuff is extremely important because this is going to help you get to where you want to be, right? Everybody starts off small. Everybody starts off, again, with something they're good at, something they enjoy doing, something they know how to make money at. That's the hard part, because that's really just living in your purpose. But once you've decided and committed to do that in the form of a business, all of these things and resources are available to help you grow your business as much as possible. Now, one of the things I talk about in terms of building wealth, especially in our community, is that, a lot of times I say that we pay for capitalism, but we don't participate in capitalism. What I mean by that is we pay for it, right? Mm-hmm. We buy all of the luxury stuff. We don't mind driving luxury cars. We don't mind going to the Louis Vuitton store and spending our money at the mall and buying things for our children. We pay for capitalism, but we don't participate in capitalism in the form of investing and taking our discretionary income and using it towards things that appreciate in value.
Right.
As a part of the Urban Capital Network, you've created something very unique that allows people in our community to do that. And so tell me a little bit about the Urban Capital Network, how it got started, and what you guys do.
All right. Yeah, thank you for bringing that up. So, yeah, in addition, and kind of complementary to my business brokerage, which is Murphy Business Sales, Urban Capital Network kind of focuses on a different aspect of creating wealth, and that's through investments. One of the things you mentioned is we tend to buy or participate in capitalism, but we're not really.
We don't reap the benefits of it. We pay for it, but we don't participate.
Exactly.
Right.
So, interestingly enough, is that one of our mantras in Urban Capital Network is we leverage capitalism to create capital. So how does that work? So if you think about the minority community in general, especially around starting businesses, typically they don't have access to capital to start a business. And if they can find someone who maybe has some money, they don't want to take a risk, and I wouldn't even encourage it either. If you only have $10,000, $15,000, right, you risk that capital investing in one business, whether it's a family member, friend, whatever, within our community. You're not going to find too many people that have anything, and when they do, they're not going to want to put all of their eggs in one basket.
Right.
Right. So what we do at Urban Capital Network is we make premium investment opportunities accessible to a broader pool of investors. Specifically, we focus on minority investors, but we don't exclude anyone. And the way we do that is through our relationships we have with venture capital firms who typically their minimum investment is at minimum $250,000. Most of the times it'll be maybe up to $1 million. And what we do is make those investment opportunities accessible at a much lower investment minimum, typically less than $15,000. So that $10,000 that you may have had to invest in a startup, now you can invest in a company that has a little bit more traction, is backed by a VC, and at this point it's de-risked, meaning it doesn't exclude all risk. It just doesn't have as much risk as that earlier stage company you may have been looking at that you got approached from a friend or family member. And on top of that, we're going to diversify that $10,000 to $15,000 investment across 6 to 10, maybe even more companies to give you a better probability of getting a return on your money. And typically, we're looking at 3 to 5x your money in 5 to 10 years. Okay, and so that's the front end of our business model, and it is a there's the end in mind is that we want going back to leveraging capitalism to generate capital. We're agnostic into what investments we make. We just want to generate some wealth and some returns within our community that generally were locked out of those wealth-generating opportunities. So now that once you start earning returns on that money from the investments we brought to you, now we're encouraging you to go back into your community, recycle those returns, and inject that capital into your community. Now you've earned some returns on your money, and you might be more willing and more capable of taking a risk and investing in your friend, family, cousin, whoever it might be, right? And we do that as a management company. So we take part of our proceeds and management fees and returns from putting together these deals, and we invest directly into minority founders. So if you think about the life cycle, we're creating our own ecosystem.
Absolutely.
Right? And that's what it's all about. Instead of trying to kick down doors, asking VCs to write us a check, we're just knocking and saying, let us give you a check. We want to give you money. We'll meet your investment minimum, but we're going to break that into a bunch of smaller checks that we allow investors to get in. But as a entity on your what we call the cap table, you're going to have one investment made up of a bunch of smaller investments, and now everybody is sharing in the wealth.
Man, that's the kind of stuff I'm talking about, because we, at a high level, we talk about opportunities to improve our community financially, but on the ground level, those are the things that we need to be thinking about, right? On one hand, we talked about business ownership, and on this hand, access to capital and access to investments that you wouldn't normally have. And so what are some things that you guys are working on now that you can talk about?
Yeah, so we just finished closing 2 funds about maybe a month or 2 ago now. We are planning our next 2 funds. And one of them is going to be, we're kind of extending our flagship offering a little bit here. Like I just described to you, typically what we invest in is venture-backed deals, and we open it up to our investor network. And then we invest in minority founders as a management company. But what we've been gaining access to and just seeing more of is that there's a lot of minority founders out there who are not yet VC-backed, but they have quality businesses. And it's more opportunities than we have capital just as a management company. We just don't have enough to go around to invest in some of these opportunities. And we're finding that there's interest and an appetite within our investment network for them to start maybe looking at some of those earlier stage deals as well. So one of the things we're kind of testing the waters on right now is putting together a fund specifically for those minority founders at an earlier stage, but are poised or in position to really have some significant growth. So, and we're going to probably even reduce the investment minimum even lower, and we may even cap it because, again, we want to protect our investors as much as possible as well. most of our investors, they're first-time investors in this asset class. Now, they might have stock investments, mutual funds, and things like that, but they haven't had any early-stage venture investments. So, we want to make sure that we limit their risk as much as possible, and we're bringing, it's a different product, but it's an impactful product, I think, and a lot of people have expressed interest in that. So we're rolling that out hopefully in Q4. Like I said, we're kind of pre-marketing, testing the waters right now. And then we're going to do another flagship fund as well, where we'll either it will be what we call a fund-to-fund, where we put together several funds, VC funds, and then we invest from our fund into those different funds. And doing something like that might give you a portfolio of 30 to 50 investments. So you think about a $10,000 investment spread across 30 investments. You really de-risk that investment.
That's awesome, man. That's awesome. Is there a website or a place where somebody can look up the Urban Capital Network and learn more about it?
Yes, www.urbancapitalnetwork.com.
Perfect. And I want to swing back to what you do for a second, because you're a business broker. You help business owners sell their company, but you do a lot more than that. And so I want you to just tell me a minute, just the full scope of your services and what it is that you do and how you can help business owners.
Yes. So from a business broker perspective, when a company is interested in exiting, we take it from the very beginning. First, we need to understand the value of your business. That involves a valuation. So if you don't know the value of your business, you need a valuation. You can't just put your business up for sale and place a price tag on it. You really need to understand the value of your business. And along those lines, in performing a valuation, we're also working with lenders to understand what type of structure would be needed to finance that business. Most buyers are not going to buy a business cash. They're going to find financing from somewhere. So we try to get the business pre-approved with the lender as well, and we also, based on what the lender provides back to us, we know what type of buyer we're looking for. We know how much of a cash injection they might have to put in to the business in order to make the acquisition. So we do those things, and that involves going through 3 to 5 years of financial statements. We go through a process called financial statement recasting. And that's a process where we identify some of the discretionary cash flows in the business that can be added back to the bottom line, thereby showing where there's more value, where your financial statements might not really show that value, but we can find that value.
Right.
And then from there, we're marketing the business. We're going to put together a confidential information memorandum that contains all the details of the business, and we're going to market the business discreetly. So, and we have a bunch of different avenues and channels in which we market the business, and it's really just a high-level profile of the business. It's not the name of the business isn't revealed to the buyer until an NDA is signed, and we have vetted the buyer to make sure that, one, they're qualified as a buyer and they're a serious buyer as well. From there, we'll take it all the way to the closing table. And as I mentioned earlier, every step of the way, we're going to involve other service providers as needed.
All right. Man, this is awesome, man. This is valuable information, because a lot of times business owners they don't know where to go, or they don't know where to look to help value their companies or even help the transition. Mm-hmm. How can people get in touch with you?
So the best way to get in touch with me is through LinkedIn. You can find me on LinkedIn. That's Lenny Saizan. The last name is Saizan. I think we have it right there on the screen. So, that's the best way to get in touch with me. And as I mentioned, so under my within my wheelhouse, I have the business brokerage, which I run under Murphy Business Sales, and then the investment side is Urban Capital Network, and I have partners in that business as well.
Man, so I appreciate that. Man. So I want to ask you maybe one more question, and this is more personal. you're a quasi business owner yourself, right?
Yeah.
Because you have
I'm a
to
business
bring
owner.
in clients and run a business. What are some best practices or jewels or motivation that you can give to somebody out there? Because we're all at different levels, right?
Mm-hmm.
Somebody may be watching this and you have a successful, thriving business and you just need resources. But you may be a business owner watching this and you're just starting out and you're overwhelmed with all of the things that you have to think about and do and organize and put together just to make your business successful. What are some words of encouragement that you can give or best practices that you can advise for that type of business owner?
And one of the things I think happens is that right when you're on the cusp of making it, you give up and you quit too soon. So you got to stick with it. You know, it's a long game, and there's a lot of sacrifices you have to make. But if you just stick with it, you're going to figure it out. So you know, one, just having the confidence and courage to see it through will go a long way. And also another thing is, I think, you know, resources are scarce when you're starting a business. I really understand that. But you can't be afraid to invest in that business. And you can't be afraid to ask for help and other resources as well. It's not always easy to find those resources.
Right.
But sometimes, man, if you may have spent $50,000 already, and you're looking at a marketing program or something that might cost you $5,000, and you don't want to spend that an extra $5,000. But that could be the extra $5,000 to get your revenue and everything you invested into the business back in a year or so, right?
Right.
So I think, you know, those are some of the things you need to really, really focus on. And then networking. Get out there. Put yourself out there. I learned that the hard way. You know, I think I may have even told you this before. I recognized the point where I wasn't doing enough networking. But since I've started doing more networking, doing webinars, participating on things like this, just getting myself out there, now I'm getting calls all the time, more than I can even manage at this point.
Right.
You know, so I think, you know, that goes a long way, just getting out there, introducing yourself to people, participating in affinity groups, whatever that may be, professional networks. You got to get yourself out there.
Absolutely. Man, this is some valuable information, and more than I even expected or thought we were going to get. And I think you read my mind. You talked about a couple of things that really brings me to the closing. You know, everything that we're talking about has to do with building wealth. And really this applies to anybody, even though, you know, a lot of times we talk to the black community, but these things apply almost to anybody. And one of the things I've talked about recently is developing a wealth mindset, thinking a specific way that helps you accumulate wealth in your mind, in your life. And, you know, I identified 3 things that are absolutely necessary for a wealth mindset. The first one, you talked about this, is sacrifice. You got to be willing to give something up. If you want to have a wealth mindset, if you want to manifest wealth in your life, you have to be willing to sacrifice something. You have to give up time. Sometimes you're going to have to give up money. You're going to have to give up some enjoyment. You're going to have to give up desires and things that sidetrack you from your vision. You're going to have to make a sacrifice. That's the first thing. But once you've agreed that you're willing to make a sacrifice, the next thing that you have to do to develop a wealth mindset is you're going to have to risk something. You're going to have to take a risk. Everybody knows that nothing grows in a zone of comfort. If you are not willing to step outside of bounds, to step outside of your comfort zone, of the place where you feel safe and protected, and step out with the sharks, you're not going to be able to grow. Your business won't grow. Your life won't grow. You have to be willing to risk something. Risk and reward are directly connected. You cannot have a reward without taking a risk. you have to be willing to risk something. Not only do you have to be willing to sacrifice, not only do you have to be willing to risk, but the last step into having a wealth mindset is you got to wait for something. You have to have patience. You know, we live in a microwave society where everybody wants everything now. You want to generate a profit in a month. You want to double your investment in 6 months. You want your business to be successful in a year. But you have to have patience. You have to be willing to wait for something. When you plant a tree in the ground, you don't see any of the activity of that seed underground for months. And then one day, something sprouts out. But if you don't have the patience to water it, to cultivate it, to nurture it, to put in the time and effort necessary for that growth, you will not see results. So if you want a wealth mindset, you're going to have to sacrifice something. You're going to have to risk something, and you're going to have to wait for something. And with that, thank you for checking out the Melanomics Podcast, and I look forward to seeing you next time. My name is JD Garnier. Have a blessed day.